Hello, my students, and hello, everyone. This is me, Teacher Angel, and welcome to our Accounting Online lessons. For today, we will talk about relevant costing that will help us make non-routine decisions. So join me in this lesson to know more about the decision-making process, the relevant costs in decision-making, and the approaches in analyzing alternatives in making decisions involving non-routine transactions. So at the end of this lesson, the student should be able to identify the relevant costs in decision making, prepare an incremental and total project analysis in decision making, and make appropriate computations to determine the optimum utilization of scarce resources. Now let's go to the lesson content. So managers must constantly make decisions. And in making these decisions, they have to estimate how each decision could affect the operating income. Because of course, the main target for businesses is to earn profit. That's why the management accountant's role here is to provide the information on the changes in the costs and revenues in order to help in making decision. And the managers here would have to choose the appropriate course of action that will help maximize the operating income over the period that will be affected by the decision. But in order to make the decision, the manager has to analyze relevant information. And how do they identify a relevant information? Or how do they know that that is a relevant information? So the relevant information here will be the expected future data that will differ among alternative courses of action. Therefore, it can be considered as a relevant information if it varies between alternatives. So if a certain cost or a certain expense or a certain revenue is not different between or among alternatives, then that will be considered as irrelevant. But if the alternatives have different costs, different revenues, then you consider those as relevant information. In the decision making, revenue and costs are often the key factors. So you have to compare these revenues and costs from one alternative to another, again, to determine which are the relevant information. So in this lesson, we are focusing on the relevant costing. We need to determine what are the items of costs and expenses that differ among alternatives. And only those costs and expenses that differ among alternatives will be included in our computation and included in our analysis. But before we go to the computation, let's go first to the decision-making process. So decision-making is the process of studying and evaluating two or more available alternatives leading to a final choice. Diba? When you decide, like when you go to the mall and you want to buy a dress, there are so many dresses to choose from. So there are so many alternatives. So here, you want to determine which dress to pick. So you have here the features of the dress. Aside from the features of the dress, you have the event, diba? You have to consider the event para saan yung dress. And of course, the cost of the dress. And also, aside from the features, the event, the cost, you also have to check if the dress suits you. Of course, your body measurements, your skin tone, your height, diba? Your waistline, and so on. So everything has to be studied. So you will not just pick a dress immediately, di ba? Without looking at the characteristics and necessary information. So if this dress differs from another dress in terms of color, design, prices, okay, so those features, those characteristics that differ are the relevant costs, or are the relevant information. And in here, when we talk about management accounting, so those features, those characteristics in quantitative form that differs, those are the relevant information. So the selection process is not automatic, it is a conscious procedure. Intimately involved with planning for the future, decision making is directed toward a specific objective or goal. So in my example, our goal there is that we need to buy a dress, so we have to pick the dress. So what are the steps in the decision-making process? Define the strategies, what are the business goals, and what are the tactics to achieve them. Okay, so you have to identify what are your main or the broader goals, broader picture. What do you want to achieve? Then you have to identify the alternative choices or courses of action. What can you do to achieve those goals? Then collect and analyze the relevant data on the choices and choose the best alternative to achieve the goals. Because diba, there's so many ways on how you can perform it, you can achieve it, but there should be one way, diba? There should be one alternative that best suits that specific goal. If you watch, diba, the movie, The Avengers, diba? Before the end game, there was this there was a movie before that wherein, diba, half of the population of the earth, diba, nag-disappear sila when with a snap of the finger of Thanos. And then, diba, according to Doctor Strange, that there is only one way out of the so many million, I forgot what they termed it, like chances ba yun or alternatives, because in one way or another, if dili mao ang ilahang mapili nga buhaton adto nga time, pwede nga maot ang kalabasan. Although half of the earth gud kay na ano gud sila na wipe out gud adto, but that was the only alternative na pwede para later on ma-revive ra pud tong na wipe out na population. So mo to siya ang gipili nila. So they have to sacrifice some of the Avengers, diba, during that time, diba, na wipe out dito sila, because para mag-lead into that better outcome. So nga to dapat pod ang ilahang pilion nga course of action at that time. Kaya maura gyud daw to siya ang solution. Although 5 years later, sakto ba 5 years later pa, before nakita ang end result, wherein na lupigan yun nila si Thanos. So we have to be careful of the courses of action that we choose. That's why in business, there is no room for mistakes, because one mistake could lead to another mistake and to another mistake. So it may be very difficult for you to correct it or recover from that mistake. So para sakto atong decision making, kinahanglan kabalo ta sa bigger nga picture, and kinahanglan na atay mga plano, diba? Na atay dapat buhaton. What if dili effective ni siya, unsa may sunod na akong buhaton? So dapat natin plan A, plan B, plan C na atay mga alternative courses of action. So in here, when we're talking about the relevant costing here, we are making decisions for non-routine transactions. Diba? If you can recall on my introduction, diba? We have to make decision on non-routine. So what do you mean by non-routine? These are the transactions that are not frequent, not routinary, dili siya pirmi. It's not the regular transactions of the company, because they can also affect man the decision making, because it's not always that accurate na you are only basing your decisions on the figures. Okay, so how do we identify the relevant costs? So we consider a cost as relevant if it is avoidable. Okay, and sa manang avoidable. What is avoidable? So an avoidable cost is a cost that can be eliminated in whole or in part as a result of choosing one alternative over another in a decision-making situation. So again, a cost daw, ang usa ka expense is considered as relevant, tawag siyang relevant, if it is avoidable. Pwede siyang likayan, pwede siyang iwasan. So meaning, if I have alternative A as opposed to alternative B, if sa alternative A, I will incur this cost, but in alternative B, I will not incur that cost. I can avoid that cost. Then therefore, that particular cost in alternative A is relevant. Okay, because it is avoidable. For example, since mahal naman ang gas karon, so I have the alternatives. I have the following alternatives. Either I will still commute. Okay, I will commute, which I usually do, or pwede pod nga magbaktas, diba? I will just take a walk going to school. So I have two options. So if ever mumahal ang prices sa gas, ay, may mahal na di ay, if ever mumahal ang price di ay, or ang fare di ay, price sa pamiliti or ang fare, ana, so musaka na siya. So I have a choice if I will still commute considering ni taas na ang presyo, or magbaktas na lang ko. So if magbaktas ko, I will not worry on the fare, di ba? Dili na ako mag-una sa pamiliti. So, pwede na akong ma-avoid ang bayad sa pliti. So, therefore, the fare, okay, expense is avoidable. So, it is relevant in my decision because it is a determining factor. Okay? Kaya maumay kalahian sa duha ka decision. So the relevant costs are expected future costs which differ between decision alternatives. So these costs that will be increased or decreased as a result of a decision. Okay. Conceptually, all costs are considered as avoidable except the two. So first is you have the sunk or historical cost. So again, lahat daw ng cost pwedeng maging avoidable, okay? Can be considered as avoidable except if it is a sunk cost or a historical cost. So what is this sunk cost? So these are past costs, okay? Or historical. Niagi na. Like for example, the acquisition cost of your old equipment. Okay, they are already spent before. So they are never relevant in decisions because they are not avoidable. You can no longer avoid them because you already incurred them before, diba? So in the future, ni mo nga use or in the future ni mo nga decision making, dili na to siya maapil. Kay dili naman gito malikayan. Kay human naman ni mo gasto. Okay? So therefore, they are eliminated from the manager's decision framework. You do not include that in the consideration. Depreciation relating to the book value of the old equipment is not relevant as well, just like the historical cost of the equipment. So, ang depreciation niya, dili na pod nimo i-appeal. Why? Because ang equipment, daan na siya, nga naa, whether you are going to do anything in the future, you will still incur the depreciation unless if you dispose that. Okay? But if continually naagihapon na siya, so naagihapon ang depreciation. The equipment, the historical cost of the equipment, padayon gihapon na siya, nag-exist na dyan na siya. So you can no longer avoid that. But you have to take note, it is not correct to assume that depreciation of any kind is irrelevant. Dili porket gi-mention nato nga depreciation is not relevant anymore, but that pertains only to an old equipment because there are depreciations that are relevant. Okay? Depreciation is irrelevant in decision only if that depreciation relates to a sunk cost, diba? Remember, the old equipment's historical cost is already sunk. So therefore, the depreciation to the old equipment, which is already a sunk cost, will also be not relevant anymore. But a depreciation on a new machine would be treated as relevant because the investment in a new machine has not yet been made and therefore it does not represent depreciation of a sunk cost. In fact, if you're not going to buy the new equipment, you can avoid the depreciation on the new equipment. Remember, diba? The relevant cost is an avoidable cost. Okay? So, avoidable siya. So, if ever you're not going to buy the new equipment, you will also not incur the depreciation on the new equipment. Okay? So, therefore, avoidable siya. The resale or disposal value of an existing asset will be relevant in any decision that involves disposing of the asset. So, of course, if you're deciding to sell your existing asset, you need to consider what would be its resale value. How much are you going to sell it for? So, kung dili siya ibaligya, then dili pod nimo i-consider ang iyahang disposal or iyahang resale value. Then, we have future costs that do not differ between the alternatives at hand. So, any future costs that will not differ from one alternative to another, they are not avoidable costs. Nga naman, dili man siya avoidable. Kay, whether you choose the first alternative or the second alternative or the third alternative, these costs will still exist. Okay? So, dili siya avoidable. Dili siya malikayan. Naagihapon siya. Okay? So, these are future costs. Diba? The first one is sunk or historical. So, karaan na siya nga cost. Kani, future costs, but they do not differ. So, therefore, these are unavoidable costs. Again, how do we know that a cost is relevant? Again, your requisite would be, or the requirements would be, it must differ between alternatives. Okay? So, dapat avoidable siya. So, costs that differ between alternatives are called as differential costs from the word different. So, dapat mag-differ siya between alternatives. Second, it must be incurred in the future rather than the past. And that future cost should differ among alternatives. Because if you can recall here, exception is a future cost nga wala nag-differ. So, kani dapat mag-differ. Because costs that are incurred in the past are called as sunk costs. Under the concept of relevant costs, decision-making process involves the following analytical steps. First, you determine all costs associated with each alternative being considered. Second, drop those costs that are sunk or historical because again, you don't consider them in the decision making. They are already there. You can no longer avoid them. Drop those costs that do not differ between alternatives. So katong do not differ, these are the unavoidable costs. Make a decision based on the remaining costs, and these costs are what we consider as the avoidable costs or the future differential costs, and therefore the costs relevant to the decision to be made. So consider this example. On December 31, 20X1, Company A completed the construction of a new 900,000 machine. On January 3, 20X2, a salesman from an equipment supplier offered to sell the company an 800,000 machine that can replace the constructed machine and provide operating savings of 200,000 per year for the next 5 years, which is the life of both the machine. So again, we have an old machine and we have a new machine. Sorry. We have a new machine. We have a new machine and a salesman offered to sell an 800,000 machine. Okay, sakto. Na yung old machine ug na yung new machine So the old machine was already constructed. So ginama na siya in 20X1. So sakto na yung old machine ug na yung new machine. In January 20X2 na ay offer, di ba? Offer for an 800,000 machine. Nga pulihan tong constructed machine. And according to the salesman, the company can save up to 200,000 a year for the next 5 years. So if you imagine the 200,000 a year times 5 years, that would be 100,000 savings. Diba? But of course, you have to consider the time value of money. So dili gyud na siya 100,000 good. The machine built by Company A has no salvage value. So which costs are considered relevant here? Okay, so the relevant costs are the 800,000 potential outlay. Yung sabi potential outlay, pwede mo ni siyang magasto once you decide to buy the new machine nga gi-offer sa salesman or the supplier. And then, the operating savings. So, manin siya itong mga relevant income. Kaya diba, kung mo buy ka sa new nga machine, you are going to save 200,000 a year for the next 5 years. So again, ang 800,000 o ang 200,000 per year ang relevant in the decision. However, it is used in determining, however, the old machine here, is irrelevant. So, diba, I explained earlier nga, it is already there. Whether you are going to buy the new machine or not, you already bought, the 900,000 machine already exists. Wala pa man ta kay baw ani nga na ay new machine, or even if kay baw ta nga na ay new machine in the following year. Pero the machine was already constructed. It's already there. So even if you will buy the new machine or not, you already spent for the construction of the machine. So although the old machine is considered as irrelevant, it is still used to determine any gain or loss on disposal. Kaya diba, i-replace man nila ang old machine, kaya pulihan man sa new machine. Di man siya additions to the machine, but it is a replacement. So tanggalon ang old machine once you bought the new machine. So there would be gain or loss on the disposal of the old machine for tax purposes, and the effect of taxes on the cash flow will be a relevant cost. So for Company A, there will be a 32% tax rate on the loss of 900,000. Kaya imo mo siyang i-dispose. So 900,000 times 32%, there would be a tax benefit. So tax benefit siya because it is a loss when you write it off. So kay loss man siya, di ba, that would reduce your tax because the losses are deductions from your net income. So, naa kay tax benefit of 288,000. So, the tax benefit, okay, would be relevant. Kano ma-relevant man siya, ma'am? Kay kung i-dispose si old machine, not so old man gyud siya, kay pila raman to ka days, diba? Pero considering nga nauna to siya. Okay, so if you dispose the machine, you will get a tax benefit. But if you're not going to dispose the machine, dili ka mo palit sa bag-o nga machine, you will not have a tax benefit. Diba? So, therefore, it the 288,000 differ between the alternatives. If you replace the asset, you replace the machine, you get the tax benefit of 288,000. But if you do not replace the machine, you don't have a tax benefit of 288,000. So, nag-differ siya sa duha ka alternative. So, therefore, it is relevant. There are also other types of costs and terminologies that are used in decision making. So, first, we have the term opportunity cost. It is defined as the profits lost by the diversion of an input factor from one use to another. So, di ba, pag mamili ta, we have the choices. We have one alternative compared to another alternative. Diba, naatay, gi-give up. Okay? Naatay, gi-give up. So, naatay, gi-forgo. So, katong ato ang benefit nga gi-forgo, that is an opportunity cost. So, they are the net economic benefit given up when alternative is rejected. They are relevant when a company is considering eliminating one activity and using plant facilities advantageously in another activity. Usually, formal accounting systems do not record opportunity costs because such costs do not involve cash receipts or outlays and only data concerning the alternative selected and recorded. They are not recorded. Opportunity costs are not recorded because we do not have actual cash payments or wala tay actual nga na-incur yun nga costs related to that. Okay? Wala gyud tay actual nga na-expensed. We are only considering unsa ka ato unta ang ako ang na-receive kung gipili pa ni nako ni nga alternative. Kay tungod kani akong gipili nawa tong isa. Okay? So katong nawa nimo nga opportunity, nawa nimo nga kita, nawa nimo nga gain, mao to siya si opportunity cost. So, however, these rejected alternatives do have significance in decision making. For example, a single proprietor has forgone the opportunity to earn a salary elsewhere by owning a company. So, duha ang alternative ani. Owning a company or working as an employee in another company. So, ang isa, owner ka, kaduha, or the other one is employee ka. Di ba kung mupili ka nga maggama ka or mag-start ka sa own business, you have your own company, unsa may mawa nimo kung wala ka nagpa-employ, wala ka nag-work sa another company. So kung gipili nimo nga magtukod sa imong own nga kumpanya, ang nawa nimo is ang sweldo that you're supposed to receive if you are an employee in another company. So, ang opportunity nga gi-forgo nimo because you choose to own your own company, ang opportunity gi-forgo nimo because you choose to own your own company is the salary that you will have earned kung nag-work ka sa lain. So, ang opportunity cost there is the salary. Katong nawa. Okay? Katong gipanghinayangan nimo, mao na siyang opportunity cost. Ani napunta sa other alternative. What if nipili ko, ma'am, nga nag-work ko sa company? Wala akong nagtukod og akong business kay mahadlo ko nga basig maano ra day siya, mabankrupt ra day siya. Wala. So kung gipili nimo ang mahimong employee, wala ka nipili sa pagtukod sa company. Unsa may nawa nimo? Gipili na ko nga mahimo kong empleyado sa kumpanya. So nawa sa kuha kay ang kitaon ako, di ba? Kitaon ako sa ako ang own business. Di ba pag ikaw ang owner sa imuhang company, you own all the profits, especially if it's a sole proprietorship. You own your profits, own profits. Ikaw po ng tag-iya. But let's go on the quantitative nga side. Ito makwenta na to. So kung ikaw ang tag-iya sa imo kagaling kumpanya, imuha tong tanang ginansya. So kay nipili man ka nga mahimong empleyado, gipili man nimo you to work for a company and not start your own business. You lost, diba? The opportunity lost there is katuuntang profit, okay? Profit nga ma-earn nako kung nagtukod pa kog ako ang business. So, ang opportunity for gana ko is katuuntang profits that I will earn kung ako ang tag-iya sa ako ang company. So, in every decision, you can get an opportunity cost. Katuuntang makuha na nako sa other alternatives pero wala na ko nakuha kay kaniman akong gipili. So, mauna siya tong opportunity cost. It's actually the benefit kung imuhang huna-hunaon, mauna siya tong income unta sa pikas na alternative. Maunta na siya tong gain nako sa pikas na alternative. Yang ano na himo man siyang cost, ma'am, kay nawa man nimo, na loss man nimo siya, na loss nimo siya. Kay nawala siya nimo, mao na nga opportunity cost. Dili siya opportunity income. Kay wala man nimo siya na gain. Kay di ba kani imong gipili dili kato. So kung kato pati imong gipili, mao ta to imong nakuha. Pero kay wa man to nimo siya pili wala man to nimo gipili nga alternative na wa to nga opportunity. And kanitong opportunity, it bears a cost. So mo to siya nga opportunity cost. Then we have the differential cost. We already learned this earlier that these are the increases or decreases in total cost that result from selecting one alternative instead of the other. Then we have out-of-pocket costs. These are either intermediate or near future cash outlay. They are usually relevant to decision. So, out of pocket, so gikan sa bulsa, so ito yung gibayaran nato. Okay, so frequently variable costs fall into this classification. For example, direct materials needed to fill additional orders are both relevant and out-of-pocket costs, while depreciation on the existing manufacturing facilities is not, because you're not paying for the depreciation. Although it's a cost, although it is an expense, kaya may depreciation expense, but you do not pay for them. There's no cash outlay. So, dili siya out-of-pocket cost. Then we have joint costs. These are costs incurred in simultaneously manufacturing two or more products that are difficult to identify individually as separate types of products until the products reach a certain processing stage known as the split-off point. So before sa split-off niya, you process a particular material. So katong cost that you spent for those two or more products na mo come out later on, okay, mao to siya tong joint cost. Then further processing costs, these are costs incurred beyond split off point. So before naghiwalay itong mga end products ato nga process, di ba na ay nag-split off sila. So naghiwalay sila adto. So katong mga magasto nimo after the split off, then that's a further processing cost. Kaya pwede pa man siya ma-convert into another product after split off. But later on, you will learn that there are products that are better off, or katong mga na produce bitaw sa process after incurring the joint cost. So na ay mga certain nga mga products that should be sold as is, dili na nimo i-process further. Naapod tong mas better kung i-process further siya. Okay, so na ay pamaagyan na to determine asa man sa mga products, joint products ang dapat i-process further, unsa pod tong pili na. And then irrelevant costs, these are costs that do not influence a decision. So these are the unavoidable costs.
If you like this video, don't forget to click like, subscribe, and hit the notification bell to be updated with the latest video lessons. Thank you for watching!